Kazakhstan has one of the largest economies in Central Asia. It has massive natural resources and a functioning stock market. So why is almost nobody investing in it? While most investors focus on the US, Europe, or even larger emerging markets, Kazakhstan sits in a strange position. It's not unknown, but it's not fully understood either. And today we're breaking down what Kazakhstan actually is as a market and whether it's worth paying attention to. Kazakhstan is the largest economy in Central Asia. It borders both Russia and China, two of the most important geopolitical and economic players in the world. And geographically, it sits in a position that makes it a key link between Europe and Asia. This isn't a small, isolated economy. It's a regional heavyweight. With a population of around 20 million and a resource-rich landscape, Kazakhstan plays a much larger role globally than most people realize. Kazakhstan's economy is driven primarily by natural resources, while oil and gas are the backbone, making up a significant portion of exports and government revenue. It's also one of the world's largest producers of uranium, along with other key minerals and metals. Compared to other Central Asian economies, this is a much more industrial, resource-driven economy. But that comes with a trade-off. When your economy is tied heavily to commodities, you're also tied to global price cycles. When oil prices are strong, Kazakhstan benefits. When they fall, the entire system feels it. One of the clearest examples of Kazakhstan's risk profile came during the oil crash in the mid-2010s. As oil prices collapsed globally, Kazakhstan's economy felt it almost immediately. Government revenues dropped, growth slowed, and perhaps most importantly, the currency was hit hard. The Kazakh tenge lost significant value after the country moved to a free-floating exchange rate. And for investors, that created a critical lesson. In a resource-driven economy, your returns aren't just tied to companies. They're tied to global commodity cycles and currency movements. Kazakhstan actually has two key exchanges: the Kazakhstan Stock Exchange and the Astana International Exchange, or AIX. This is where things start to differ significantly from other places in Central Asia. You have more listed companies, better liquidity, and greater foreign participation. It's still not a major global market, but it's functional, accessible, and developing. This is still a developing market, but it's far more investable than most frontier economies. So where's the opportunity? Kazakhstan sits in what you might call a middle stage of market development. It's not early like Kyrgyzstan, but it's not fully developed either. You have strong resource exports, strategic geographic positioning, and increasing integration into global trade networks. And in many cases, valuations can still reflect that in-between status. This is what a transitional market looks like: developed enough to access, but still overlooked enough to create opportunity. Kazakhstan is currently led by President Kassym-Jomart Tokayev. Following the long-standing leadership of Nursultan Nazarbayev, the country has been navigating a transition toward a slightly more reform-oriented but still centralized system. There have been efforts to modernize the economy, attract foreign investment, and strengthen financial infrastructure. But like many resource-driven economies, there's still a balance between reform and state influence. Kazakhstan sits in that space between reform and control, and that balance matters for investors. As for the currency, Kazakhstan uses the Kazakh tenge, and like many commodity-driven economies, its currency is closely tied to global energy markets. When oil prices are strong, the tenge tends to stabilize or strengthen. When they fall, the currency can weaken. So like in foreign countries, your returns aren't just about stocks. They're also about exchange rates. In some cases, currency movement can matter just as much or more than the investment itself. And this is where things come into focus. Kazakhstan may be more developed, but the risks are still very real. You're dealing with political concentration of power, heavy reliance on commodities, currency volatility, and regional geopolitical exposure. You're not just investing in a market, you're investing in a resource-driven system that moves with global forces. This is where Kazakhstan stands out. Unlike other Central Asian countries, this is a market that is actually accessible to global investors. You have exposure through emerging market ETFs. Some companies listed internationally and more developed brokerage access. Unlike major markets, Kazakhstan doesn't have deep ETF coverage. Most exposure comes indirectly through commodity funds, uranium ETFs, or broader emerging market strategies. Kazakhstan does have a few listings traded internationally. There are Kaspi.kz and Kazatomprom that trades on the London Stock Exchange. Halik Bank and Kazmuni Gas trades internationally, and Freedom Holding Corp trades on the U.S. exchange. That makes it significantly more accessible, but it also means exposure is concentrated in a handful of large firms. Even when you're investing in public companies, you're often indirectly investing alongside the state. Kazakhstan isn't just a theoretical opportunity, it's a market you can actually invest in. So where does that leave us? Kazakhstan isn't an undiscovered market, but it's not fully priced like a developed one either. It sits in that middle ground where opportunity and risk are both very real. The question isn't whether Kazakhstan matters, it's whether it's being valued correctly. If you're interested in deeper analysis on frontier and emerging markets, markets most investors overlook, consider subscribing. This is Frontier Market Intelligence,